And what was the outcome? When we started to raise our, let's say, Series F, so we fundraise, the Bitcoin was between 100 to 110 US dollars, right? Our final price of the buy was between 79,000 to 80,000. So basically, you see, thanks to that strategy, we bought far below the market because otherwise we would be like in the situation where we would buy like probably $110,000 per Bitcoin. So it was a very good strategy for us.
Hi, everyone. Today I'm joined by Wojciech Kaszycki, a fintech executive with more than 30 years of experience in payments and digital finance. He is the CEO of Mobilum and the Strategy Advisor to BTCS S.A, a listed Polish company that adopted Bitcoin as a core treasury asset in 2025. Wojciech, what made BTCS pivot into Bitcoin?
So BTC, hi everyone, my name is Wojciech. It's a pleasure to be here. Thank you, Andrew, for inviting me. Before this call, I read a little bit about you as well. So I know that you are also from traditional finance and quite experienced person in the space. So it will be great pleasure speaking. So first of all, I'm a big believer in something what's called Bitcoin standard. I believe that especially in the current world where all of the fiat currencies, because of the inflation and what's happening around us, they're losing value. Keeping assets and keeping an asset like Bitcoin, which is anti-inflationary, cannot be just printed and so on, helps us to protect the wealth. So that's why I decided to set up a BTCS, which is, as you said, previously known Vacomtech, in order to showcase, to prove to the market that digital assets treasury is something, and Bitcoin standard is something that should be held and maintained by every entity, every company which wants to build value for its investors. The digital asset treasury company, which is a public listed company, is a great example of something like this. Why? Because it's publicly listed. So basically, it issues reports, it communicates on a daily basis. Whenever something important comes up to the market, it sends a report to the market. So basically, every entity which is not maybe very familiar, or the founder or the CEO or the board, which is maybe not very familiar with Bitcoin or digital asset space, can see it, how it looks like, how it works, and then make a decision whether this is something that they want to replicate and they want to maintain within their organization as well. So from one perspective, you can call it experiment because I want to prove to the local market that this is something how all of the companies, they should keep their treasury. Secondly, it's the only digital asset treasury company in Poland and in our region. So basically, this is also like an opportunity for the local family offices, for the cumulative investment schemes and retail and corporate investors to invest in such on the local market, not go abroad, not to go to abroad.
So what does Mobilium actually do that a bank or an exchange can't do on its own?
I thought that you are asking about the BTCS. So I just explained about the BTCS, which is Digital Asset Treasury Company.
Okay, so essentially, what is the difference between these two?
Okay, so Mobilum Group, or Mobilum by itself, in general, it's a group of licensed entities which provide on-ramp and off-ramp and issuance of the cards to the market. We are working in a B2B2C mode, which means that we serve our partners, which have their retail investors, in order to bring a technology related to the traditional finance, but also to the Bitcoin, to the crypto, to those investors. while BTCS is a publicly listed digital asset treasury company, which provides Web3 services for financial markets, but also for other kind of the entities. In the same moment being a Bitcoin standard showcase, so proving to the market why the entities should keep their treasure in Bitcoin. So those are two independent projects. The common thing for both of them is digital asset space.
So Mobilium makes cards, is what you're saying?
Correct. We issue debit cards, we issue prepaid cards, we issue business cards. We allow people to use digital assets in order to top up those cards. We also provide lending technology services and other compounding corresponding services in order to make whatever is needed for the retail customer to use the most of the digital assets which he holds in his wallet.
And BTCS, just so I understand, is being used as a system to basically as a treasury side, to hold Bitcoin
Correct.
as a treasury side.
BTCS is a digital asset treasury company. This is
Okay.
actively managed treasury company because we run validators, we provide services to the market around it, and we use digital asset treasury as a support for the services that we provide.
Yeah, because obviously it's related to payments and cards specifically.
So basically, those are a little bit independent services. BTCS has nothing to do with payments or the cards. It does help companies, for example, with tokenization. So today, as you know, RWA, real world assets and tokenization, is like a very strong movement. And BTCS helps companies who wants to tokenize, for example, private credit, public credit, but also other spheres of real world assets. It helps with professional services, like for the financial institutions, to help them to tokenize the flows. While Mobilum, it's just on-ramp, off-ramp digital banking technology. So basically, it's a technology that helps to buy digital assets, to sell digital assets, or just to use them or exchange.
Okay, and did compliance play a part here with MiCA or anything along those lines?
Of course, compliance is the most important part of those business because digital asset space was absorbed by the financial market. So basically, we have Genius Act in US and other corresponding acts. We have MiCA in Europe, but it's not only that. I mean, other countries are also implementing very important frameworks like UAE, for example, with their licensing paths or other jurisdictions. Yes, compliance, anti-money laundering, those are very important topics.
Okay. How did BTCA first come about? Was it early in 2025 or late 2025? And how did they start buying their Bitcoin? Was there a strategy involved, or did they adopt a DCA way of adding?
So it started in the middle of the last year. The reason why it started is that I invested in few digital asset treasury companies before, mostly in US market, in order to check how that works. And basically, I saw that most of them, I'm not talking about the biggest one, the strategy, obviously, because it's a different kind. Most of them, it was just FOMO. So basically, people were just getting money from the investors, buying treasury, and that's it. I wanted to do a different thing on the market. I'm, as I said, a believer in Bitcoin standard. I believe that Bitcoin is an asset which should be implemented by each responsible treasury manager in order to keep the value for the company. So basically, what we wanted to do, we wanted to create a public company which has obviously two main, let's say, directions of the operations. First direction of the operations was to provide to the market services around Web3. So basically to teach to implement, to consult other entities how to use Web3 with their current operations. That was like a first stream. The second stream was to build a digital asset treasury as a kind of the showcase, you can call it experiment, to prove to the market that it has a lot of sense, and that's the one of the few ways to sustain the value for the investors, because traditional fiat currency, the value of this currency is going down because of the inflation. So we started in the middle of the last year. We did a first issuance of the shares in the September, and we started to buy Bitcoins, but not just buying or DCA or whatsoever, but we were selling cash covered puts, because that's one of the strategies which is very well known on the market. It's underserved. It was used on a scale, first time I recall, by Berkshire Hathaway once they started to accumulate Coca-Cola company shares. So basically you sell puts, so you are receiving premium and you promise to buy, like, for example, few percent under the current market value. And that way you can, let's say, always get a premium. So you can get like a yield, you can call it a yield. And you just, let's say, experiment with the market, because if there will be like a certain drop, then you buy. And
So
what
it's
was the outcome? Yeah.
so it's like you're buying the dips, basically. Sounds like you're buying the dips.
It's not like a buying the debts. It's like a promise to buy below the current market value. So basically, let's imagine you see the Bitcoin at 64,000, right? But you are saying, okay, if it will drop to 60, I will buy. And it's an option. You sell an option, right? They promise that if someone buys from you the option, it's a promise that when at the, let's say, the date of the execution of the option, the price is 60, then basically the transaction commences. And what was the outcome? When we started to raise our, let's say, Series F, so we fundraised, the Bitcoin was between 100 to 110 US dollars, right? Our final price of the buy was between 79,000 to 80,000. So basically you see, thanks to that strategy, we bought far below the market, because otherwise we would be like in the situation where we would buy like probably $110,000 per Bitcoin. So it was a very good strategy for us.
If you buy that spot, basically.
Correct.
So with the price where it is today, which is below the 70 range, are you speculating? Are you adding at this point, do you think, or are you going to wait?
We are public entity, so I cannot tell you more than it's in the public reports. But I can tell you personally, in my opinion, those are like a very good levels. And for sure, each entity should start to accumulate. Of course, there are different people saying that maybe the price will drop further and so on. Maybe, I don't know. But comparing to the top of the top, the current price is very good for accumulation. And it doesn't make any sense to wait when it drops to 50 or whatsoever. Why? Because digital asset treasury company, it's not a short play. It's not like a speculation. It's like a play for 3 to 5 years minimum. And I believe that 3 to 5 years, it's a long period enough that you don't have to focus to buy at the minimum level. It's enough if you will buy like 20, 30% below the market, and that's what we've done.
Okay, sounds well thought out. When we're talking about Europe's first digital asset treasury company and their stash of Bitcoin, which is, BTCS, the company where BTCS, exactly. Here I have that you're staking Validator, you're putting the Bitcoin to work through staking, Validator operations, and tokenized real world assets. You touched a little bit on tokenization, but what exactly, how are you staking, and what does validator operations actually mean?
So we run currently 2 validators, and we are building the third one. So today we run a validator for CoreDAO, we run a validator for ZIGChain, and we are building a validator for Canton Network. When you, let's say, run a validator in a network, which is like a proof of stake, not a proof of work like pure Bitcoin, then the quality or the power of your validator depends on the amount of the assets or the value of the assets, if you wish, that back the validator, support the validator. Because we are very strongly aiming at the financial markets, for our partners, it's also very important what's the value of the, let's say, balance sheet that we hold, because they don't want to work with a company which is worth nothing, and potentially the company, if the company will provide a bad service or implement some solutions in a bad way, there may be a loss at, let's say, the financial institution. So basically, those two things allow us to prove to the market that we have enough, let's say, stake to make sure that we will provide the best service possible. In a decentralized finance world, in the blockchain world, it means that we delegate the digital assets which we hold to the validator. In the real world, it means the company, which is our counterparty, can see precisely what's the value of our balance sheet and can decide whether we are wealthy enough to hire us to render services for them. In terms of the yield, we are doing multiple different things in order to generate yield. One of those is, for example, devoting digital assets which we hold to our validator in CoreDAO network. CoreDAO network, depending on the amount of assets which are delegated to the validator, pays yield. We convert this yield then to the stable coins or more Bitcoins in order to, let's say, increase value. We are also very looking for the opportunistic deals where we can back different protocols, like we can back liquidity pools, we can back lending protocols, we can back some new chains which come to the market, providing our liquidity, and in advance, those protocols pay us yield. It's like paying, let's say, money for providing money for them so they can have significant liquidity in the protocol and in the chain. And this is like an opportunistic approach. So basically, we are always looking for a better deal for our digital asset treasury because we are working for our investors. So more, let's say, yield we will generate, more yield will stay in the company, more yield can be shared among the investors who invested in our entity.
Interesting. Okay. Just going back, like, to maybe the case why Bitcoin digital treasury assets should exist at this point. In your experience, is there an actual monetary debasement problem with the euro and the ECB, or is that overstated?
To be honest, it's like this, that we are living in a world where still digital assets is a novelty. And don't understand me wrongly, but people behind ECB and ECB and, I mean, policy makers, they are maybe not the strongest one in terms of the understanding or the novelties within the digital asset space, right? So I perceive that today someone is trying to use digital asset treasury in order to find a way how they can, let's say, defend European market and euro as a currency from the US dollar domination, right? But in my opinion, they are using wrong tools for that because people will start using euro and will promote euro when they will see benefit from that. As long as they see benefit from using US dollars, there is no law that can force them to stop using US dollars. They will continue to use US dollars, right? I don't know why, but the policymakers in Europe, they think that they can just, by the law, and force people to forget about using other currencies than euro. The history shows for the last hundreds of years, I would say, that there are much better tools to promote something than enforcement. But I believe that sooner or later they will understand it and this will change.
Okay, pushing two questions into one.
Don't worry.
Have you actually read through MiCA yourself, and where do you think it sits? Is it genuinely holding back innovation, or is it more that it's building in guardrails so it's harder for bad actors to get in? And are European boardrooms talking about Bitcoin right now? Are companies coming to you directly asking how they could bring it into their own treasury, maybe as a hedge against currency debasement?
So first of all, yes, I read MiCA several times. There is like a long debate for the last few years about MiCA. So first of all, it's good that any kind of, let's say, law was introduced in European Union. The question is whether it was introduced in proper way. But as I said, even if some of the MiCA parts are not the perfect one, it's good that that MiCA was introduced in general, because before every country was having its own law, and basically there was no harmonization within European Union. Now the first version of MiCA tries to implement it. I know that the policymakers are already working on the second version because they found some, let's say, inconsistencies within this space. The second part of your question is whether it is good law or whether it's a bad law. I mean, it's
Does
a
it
law.
stifle innovation because
Yes,
less
exactly.
people are getting the contract, less people are getting to the law,
In
right?
my opinion, it could be implemented or written much better to support innovation. In my opinion, now it does not support innovation. That's all. But as I said, the reason is because the policymakers, they wanted to introduce something. I believe that motivation was different. Motivation was how to stop the nomination of US dollar in the crypto space in Europe. So they used the tools they knew how to use. It's not the best law for sure, but it's good that we have any law. Now, for example, in Poland, we have a situation where we are, I believe, one of the only left countries from European Union which do not yet implemented the MiCA, right? So basically, we don't have a body who controls the market, who supervises the market, and so on, which is a really bad situation, right? So any law is better than no law, but yes, MiCA can be improved significantly to support innovation.
Okay. Taking it now to Poland, curious, what's Poland's relationship with Bitcoin like? And are ordinary, families and people there holding it? And what does the government make of it? I know you just mentioned there's no real law going on.
So basically, in Poland, we were very, very unfortunate. We do not have yet the implementation of the MiCA, but there were like not so good situations happening this year. I mean, first of all, there is like some scandal around Zonda Crypto, one of the exchanges which apparently it's not yet, let's say, determined by the prosecutors, but people are saying that the company just mislead the investors and they don't own their money. So basically, a lot of people lost a lot of money.
In
Additionally,
Poland,
in Poland,
of Polish exchanges?
no. Zonda Crypto was like an exchange ruled by Polish people, but officially under the Estonian supervision. So they have like a virtual asset service providers providing license or registration in Estonia. But additionally, there were few payment institutions which license were shut down because of the potential relation to Russian sanctioned entities. And all of that creates like a feeling or a mood on the market that crypto is something bad, which is untrue. But I mean, as you know, perception is everything. So that's worrying because it can cause Poland to be like not on the beginning of this movement, but at the very end. And if you will look at the history of digital assets, crypto, blockchain, you will find out that a lot of those innovations were created or in Poland or by Polish people. So again, we are in the situation where Poles create novelties outside Poland because Poland does not support it because we don't have law in place. And that's something which is not good for our country.
And are they working towards introducing law, or are you waiting, or is Poland waiting for the EU to roll out some form of law?
You know what I mean? To be honest, there were 3 tries of the government to push the law. 3 times they tried with this exactly the same acts. 3 times the president declined it, saying that the acts that the law they try to announce is not good for the local market, is not good for the for the people who wants to buy, hold crypto, or for the companies who want to offer the services. I kind of agree with some of those theses. I believe that the law can be much better. Unfortunately, the situation is like follows today. I mean, there is a lot of MiCA licensed entities in other parts of the Europe, and those companies just enter the Polish market. What it means? It means that we as Poles, we didn't lose the possibility to buy crypto. But the Poland as a country, our treasury, our taxes, I mean, we are real losers in terms of that part of the let's say economy, because foreign companies are selling digital assets for Polish citizens. It means that they are supervised by foreign security and exchange commissions, and they pay taxes somewhere else, not in our country.
So it's in the interest of Poland to sort of slow down on the resistance to law.
Of course, we should implement MiCA as soon as possible. We should start issuing license, and we should have our own Polish companies being MiCA approved and accredited to offer crypto services to Polish people. Today, those services are offered by foreign institutions, which is totally not good for Polish economy.
I know you're short on time, but I have, let's say, 3 more questions. One is, let's say a restaurant wants to start. Let's say a restaurant wants to start putting the Satoshi on the menu. Can the company, I'm just called your company is called
Mobilum.
Mobilum, is that? Can Mobilum be used as the ramp for this company to go and accept payment in Satoshi? And if so, do you think, like, is the industry in Poland ready for that kind of demand for, let's say, restaurants just simply list Satoshis on the menu to see if people will pay for a plate of pasta and Satoshis, you know?
So if you will ask, let's say, real Bitcoin holders, they will tell you they will never sell their Satoshis to pay for anything.
Plate of pasta, though, is different, I think.
So basically, the tendency is to go into the direction, and we as a company, we support it and we follow this path, where you can use your Bitcoins or your Satoshis as a collateral, and you can get a fast, instant, credit line or loan, however it's called, in order to pay in the restaurant for anything you want. So that's why we issue through our, let's say, licensed entities and through our partners cards in order for the holders of Bitcoins or Satoshis to use the wealth they have in their wallets. But yes, of course, I mean, as I said, even if in Poland it's not possible now to get licensed, we are working with partners from outside of the Poland who are licensed to hold crypto, to on-ramp, to off-ramp crypto. And it's possible. I mean, it can be implemented today. But I don't believe that this is a direction to go. I believe that as long as the Lightning Network will not become a kind of the standard in the space, Bitcoin will not be used as a means of payment. It's a great store of value. And that's something I promote as a BTCS, as a digital asset treasury company, that each restaurant, as you mentioned, if they generate wealth, this wealth should be stored and kept in something which is against the inflation. And today, the best way to avoid inflation is to convert part of the assets into the Bitcoin. There are people who are saying it's too novel. There are people who are saying it's too volatile. There are people who are saying maybe it will go to zero. And I'm always explaining to those people, no one knows. We don't have the crystal ball. Maybe it will go to zero. But then if you just put 2% of your wealth into it, what happens? I mean, 2% will go to zero. In terms of the 10 years, decades, it's nothing, right? But what if this Bitcoin will skyrocket to 10 million? Can you sustain today? And can you think what will happen if you will not put anything into this, let's say, asset, and how you will look in years when the asset will go 10 times, 100 times, or whatsoever? Why big international banks advise their customers to put at least couple percent of the holdings in Bitcoin? That's exactly the answer. No one knows what's the direction of the price of Bitcoin, but everybody knows that one Bitcoin will be always one Bitcoin,
Yeah.
and there is only 21 million of them. So who is faster gets the premium.
Yeah. So last question. So first, do you think the 4-year cycle is still something worth paying attention to? And BTCS, from how I'm understanding, they have their hodl stack or their stack of Bitcoin, which they're deploying into yield and liquidity ways to generate income using their Bitcoin. However, is that just a portion of it? And with another portion, would they actively trade the 4-year cycle?
No, we don't. So first of all, I don't believe in cycles. That's me. I mean, on the beginning, because the Bitcoin was novelty and the liquidity was small, there were cycles. Now, when more and more, let's say, institutional money comes into the Bitcoin, we will maybe have different cycles, but I don't believe in 4-year cycle. 4-year cycle was introduced because of the miners. Because of that, we had those cycles. Now I believe that miners are no longer, let's say, the ones who are dictating the market. That's why I don't believe in the 4-year cycle. But secondly, digital asset treasury companies are not to speculate. That's why we do not speculate with our Bitcoins. That's why we are not actively trading the Bitcoin. We are using the Bitcoin as a collateral for multiple options and opportunities to generate yield. And I believe that once you are using your, let's say, Bitcoins to speculate, to trade, it's no longer digital asset treasury company. It's just some kind of the fund, I don't know, hedge fund, maybe some speculation engine, but it's not digital asset treasury company. The purpose of the Bitcoins in our balance sheet is different. It's to keep the value and prove to the market in 5 years from now, maybe in 6 years, 7 years, that it was like a good model to sustain the value. Because, today we cannot assume what will be in the future. We don't have the crystal ball. But in 5 years, we will be in the position to look 5 years back and find out whether our strategy was good or not.
Yeah. And BTCS is working with Hemi on this yield.
Also, yes, Hemi is one of the partners we announced. Not only Hemi, we are chain agnostic, we are product agnostic. We are just looking for the best ways how to, let's say, put our Bitcoins at work for goods of our balance sheet and our investors.
Nice. Okay, thanks for joining me, and good luck
Thank you.
with this
Thanks a lot. Thanks for inviting me.
and hopefully the Europe will start picking up their weight in this whole space.
I'm pretty
Seems
sure.
like they're asleep.
We are slower, but end of the day, we are going into the good direction.
Hopefully, yeah. Thank you, Wojciech. Much appreciated.
Thank you, Andrew. Thanks a lot. It was
Bye.
a pleasure.